Go for it.
All right. Good morning, everyone. Thanks for joining us. For those of you who don't know me, my name is Bobby Poth. I am the co-owner and co-founder of Elite Real Estate Academy, which is mine and Manuela's newest venture. If any of you saw my Facebook video the other day, for quite a while, Manuela and I have been trying to figure out a way in which we might work together. Both of our careers have taken different paths with brokerages, so we knew that likely wasn't going to happen. But then COVID happened. So we decided when the face of education in Florida was changing for real estate, it was an opportunity for us to do something that we had been wanting to do and take our passion for education and instructing and turn it into a school that's doing things a bit differently than everywhere else in Florida. So thank you for joining us. This is the first virtual class we're doing for Elite Real Estate Academy. And we offer everything from your pre-licensing to post-licensing, broker courses, a lot of different products. And we plan on doing classes like this, hopefully once a month on the different contracts, buyer brokerage agreements, listing agreements, taking out certain sections that we know people have issues with, and having good conversations. So you all know Manuela, or most of you do. Manuela has been teaching for quite a while around here for Bob Hogue, for Florida Realtors over at Pro. So she's a well-respected, well-known instructor and broker. And then David Phillips, the attorney who will be joining us, is running a bit late this morning, but David is a partner over at Phillips Hayden Libby. David does, in his practice, real estate litigation and also handles title and closing. So that's really his background. So hopefully he'll be able to bring us a wealth of knowledge when we get to certain sections. Is there anything I missed?
No, you're all good.
All right.
All right, let me go put the contract up on the screen. And Bobby, we both need to keep an eye on when people enter into the waiting room so that we don't miss anybody. Okay, can you all see the contract? Bobby?
Yep, it's on my screen.
Okay, beautiful. Okay, so we're going to go over those parts of the contract that have fillable information in. And the funny thing is that every time I do a contract class, the standard contract class, 3-hour class, I get a feel for who's in the course, how many newbies, how many seasoned agents. And then I throw out the question, just like I will be doing now. And I would like for you to please mark something in the chat. What do these little stars, the little asterisks next to the lines of your contract, what do they actually mean? What's their purpose? Somebody please put something in the chat. Tell me what the stars, the little asterisks next to the number, what does that mean? Required field, you need to fill fillable items, required field. Thank you, thank you. I'm always so happy when people actually know things. I'm so proud.
Don't we wish that more people knew that?
Oh, I know, I know. It's the easiest and most wonderful thing that Florida Realtors did for us. When we are quickly filling out a contract form, we know we've got to pay attention to the lines with the little asterisks. It's a cheat mechanism that they gave to us that is absolutely beautiful. And I can tell you from experience that sadly, there are a lot of agents out there who do not know that simple little trick. So before we go any further, I would like for you to please keep in mind there are a few functions on our Zoom call that by now, we probably don't have to explain it to anybody any longer because we're all seasoned Zoom participants. When you have a question, and this is going to be an interactive course, when you have a question, please put it in the Q&A, because in the Q&A, we can see it, it doesn't disappear. In the chat, it goes by so fast sometimes that we may miss a question. So please, if you just want to make a comment, or if Bobby and I ask you for some input, we'll ask you to put it in the chat. If you yourself have a question, please put it in the Q&A section. And I promise to you that Bobby and I will answer all of your questions. If we run into a question that we don't have an answer for, that's hopefully when David, the attorney, will jump in. And if worse comes to worse, we're going to make it our homework assignment to research that question with legal to get you an answer after this presentation. I'm asking everybody to be muted during the presentation so that we don't hear your dogs barking and background noises and anything else. And therefore, we can pay attention to you when you have a question in the chat, in the Q&A. So the first part that we need to fill out on the contract is the parties. And that seems to be one of the most simple things in the universe. And nonetheless, as a managing broker, as an instructor, Bobby and I can tell you we see so many mistakes in there. When it comes to who is going to enter into this contract, we need to have all of the sellers, not just one seller, all of the sellers and all of the buyers. And it may be a very easy thing. You may go on public records and you may look it up who is actually on this deed, but it might not be that that is the proper information, because we all know somebody could own a house by themselves. They could have gotten married down the road, and we actually need the spouse to sign as a seller, even though the spouse is not on the deed. It could be a trust where we now need to find out who is actually authorized in that trust to sign the contract, because you would be surprised how many times people are not aware of it. If there's 5 trustees, that 4 of them might not know that they don't actually have authorization to sign anything. So it's really important that we know who's the right seller. So when Bobby and I were talking about this yesterday, he said, well, how do we find this out? We really don't find this out unless the listing agent shares that information with us. Some of you have been around long enough that you know we used to do a lot of short sales. And on the short sale, we sometimes had to, or in a foreclosure, let's go with foreclosure. On a foreclosure where the actual seller is the lender, it wasn't good enough to just write Bank of America, because they had that particular branch or that particular department had a legality name that we needed to find out. So please, as a listing agent, share somewhere, if it's in the broker remarks, if it is in offer instructions, share what the legal name of the seller or sellers is. It will make life so much easier. Same with the buyer. Husband and wife want to purchase a property, well, they both have to be on there. If we saw something the other day where an additional purchaser was added at closing, that purchaser didn't show up anywhere on the contract form, that's just not acceptable. It seems simple, but it is a little attention to detail that goes a long way. And you don't have to go back to the parties to eat crow and ask them to fix something. So those are our parties. And then we're going into the next segment, your property description. Bobby, that's your part.
So property description, so many times I've seen, and you likely have as well, an offer come over when you're the listing agent and it does not have all of this information completed, or the information is inaccurate. And when you're working with buyers, a lot of times I see that agents will just rely on what might be pre-populating from whatever system they might be using. Ours pulls from property records, some pull from the MLS. The correct way to approach the property description is the address you're going to pull from your property records and the MLS, but your tax ID and the legal description, those are entered into the property appraiser website by a human, and humans often make errors. So there can be a transposed number, there can be missing parts of that legal description, it can be inaccurate. It could reference something in the actual legal description regarding riparian rights, and that might not have transferred into what they typed into the property appraiser website. So your legal description should always come from a deed. The deed was the legal transfer of property, and that's where you're going to have your most accurate legal description. So if you are taking it from a public record, be sure to make sure that you are looking at the deed as well to make sure that it lines up and that it matches. As you go down in section 1 and you have personal property, some of the common errors that I see in this section is that people don't realize that there are certain items listed in subsection D that do convey with the property. These include what's listed there, your range, ovens, refrigerators, dishwashers, disposals, ceiling fans. And a lot of times you'll see agents still put in that additional line there, refrigerator, dishwasher, even though it's already listed. And that can give the assumption and the impression that there is more than one. So if you are including more than one, maybe there's a garage refrigerator, reference the garage refrigerator. If you simply put refrigerator, it's giving the impression that there are two, and it's already something that is conveying with the property. As a listing agent, when I see something come over and I know there's only one refrigerator in there and somebody has put it in there, I immediately assume that this agent has absolutely no clue what they're doing. And in a multiple offer situation, that's something that can impact the impression that the seller might have when reviewing offers. The other things that are important to remember is that, Manuela, you have a really good tool that you use where you have a house and you say if you turn it upside down and it doesn't fall out, that it's a fixture and it should be listed. She's getting her house. It should be listed in there if it's not in the paragraph there. And that's a really good way of looking at it. I have a property that went under contract yesterday evening, and in it we had washers and dryers in the house and in the garage apartment, as well as a removable hot tub. It's a portable hot tub that is in the back of the house that the buyer's agent did not list as something that conveyed. So I wanted to make sure, listen, it is going with the property. We're going to list that there. We often say when you're listing a property, tell your sellers if they want that chandelier in the dining room, remove it before you list it and put a new one in its place or cap it off. Because if it's in the property and it is listed here in this section, it is something that conveys. Not a different chandelier that you purchased at Home Depot, that $10,000 one that's in the dining room, unless you specifically excluded it. As a matter of best practice, I like to save to my file the screenshots of the MLS photos so that we can look back when we are doing our walkthrough to make sure that it is the chandelier that was there, that the refrigerator is the refrigerator that was there. I'm sure we've all encountered at some point somebody who has replaced a nice refrigerator with a used one, and this is something to pay attention to.
So we have a question here in our chat, and that question says, if the MLS has listed appliances and features, can that MLS be included with the offer in a comment on line 20 as per MLS?
On line 20. I'm curious your opinion on this. I'm very leery of including MLS attachments as part of the contract or as per MLS. Again, that is something that is although the seller should have signed off on that MLS entry form, that is something that often was manually put in by the agent. And that is what the agent is presenting to the public and to other realtors. It is not the contract between the buyer and the seller. And while you might try to include it as per the MLS, it's not technically an addendum. I think that there's a gray area there when it comes to timestamps. As a matter of best practices, I would specify it either in that section or in an addendum to the contract, not as per the MLS. That can change from time to time. And it just leaves a really big gray area, in my opinion.
Now, I would absolutely agree with you. I always suggest to everybody, the day that you're preparing an offer on a piece of property, please save that MLS entry. But the MLS, when you think about it, is therefore as a vehicle for cooperation and compensation amongst Realtor members. So it literally has nothing to do with the parties of the contract. If it doesn't go to court, if the contract doesn't go to court, that MLS sheet along with it and that reference on line 20 may be adequate enough to argue between the buyer and the seller. If it were to go to court, and this is the reason why Bobby and I are doing this contract needs to be written in a way that it will hold up in court. If it were to go to court, I wholeheartedly agree with Bobby that most likely a reference as per MLS is not going to be enough to get the point across. So ideally, you add either an addendum if it's more than what the lines are here, or you write it in the additional terms. That could be a possibility as well. Now, Chris writes, I list make and model as seen at time of showing due to appliances being swapped out. It's a really good idea, especially if it's nice appliances, that you put the make and model on there. Oh, here comes David. You put the make and model of the appliances and write them down somewhere, or have, even more ideal, have the buyer write them down so that you are not taking the responsibility for it. Because we have seen that when people have really nice appliances, they bought that $2,500 washer and dryer set, and they say, yes, we're leaving the washer and dryer, but by the time you go back for the final walkthrough, there is a $600 washer and dryer set. So write it down, or as Kat just suggested, take a photo of the model tag for major appliances. Take a photo of the ceiling fans. We've got some beautiful ceiling fans out there. And then you might go back into the house for final walkthrough and they replaced it with that $150 standard Home Depot ceiling fan. If it's nice additions that are in that property, take pictures of them so that you make sure that you are actually, the buyer is getting what they bargained for and don't get cheated out. And then please remember, if it is attached, and when you think back on your way back when basic real estate course, where they had this goofy acronym, I believe it was IRMA, correct me if I'm wrong, Bobby, the intent of the parties, the method of how it was attached, the adaptation of the article, and the relationship between the parties. So we were talking the other day about a TV that is mounted on the wall. Most of these TVs have very specific mounts to very specific models. If you are taking that TV off, the bracket might still be there, but that bracket is completely worthless to somebody for their other TV. So if you don't want to leave something that is attached, then have the seller take it down before you start showing the property. Have them fix the wall where the holes are. This is the part where Bobby was referring to my little house, and you can't see it on here now, but my little house, when I can't see it, but I basically take a house, I flip it upside down. Anything that would fall out is personal property, so the parties take it with. If it were not falling out, if it didn't fall out of the house, if it stayed attached, you need to address it in the contract somehow. Does it go or does it stay? I got a call years back from an agent of mine where I could hear screaming in the background. He had foreign speaking buyers and they were flipping out. I didn't understand a word they were saying, but I could definitely hear that they were not happy. There was a gazebo that had been mounted on the concrete floor in the backyard that now at the time of final walkthrough was gone. And the agent called me and said, what do I do? What do I do? And I said to him, contact the seller's agent. Due to the fact that that gazebo was bolted into the concrete, it was a fixture and it needed to stay. So the listing agent said, well, he didn't know where it went. And I said to my agent, then you guys need to figure out what the cost of a gazebo is. You split it and you put a new gazebo in for the buyers. Well, that kind of got some fire under the listing agent's rear. And he now all of a sudden found that gazebo and he called my agent and he said, we'll bring it back, but we're not going to reattach it. And I just said, well, I'll bolt it into the ground myself if that needs to be. So it causes issues that shouldn't be.
I want to piggyback real quick on Catherine's comment about taking a photo of the model tag for major appliances. Like Manuela said, that's something I also like to do. I think it's a really good CYA for yourself and for the buyers that you're working with. I am leery of photographing inside somebody else's home without permission. So I often rely on the photos that are in the MLS and screenshots of those. And then the photos that your home inspector takes. I ask the home inspectors that I work with to make sure that they are taking photos of the appliances as well as documenting the make, model, year of them if it's something that's visible, because that's another way to solidify what was in the property at the time that you were in contract, so that if it were to change prior to closing, you've got that documentation of what was in there.
And I want for you to also think about that some properties are staged. So not all the furniture that we see in there would be remaining anyway. So as a listing agent, please make sure that something is staged and will not stay. So we have a comment here from Pat that is really an interesting comment. She says, make sure you look at islands. They sometimes have wheels and after walkthrough can disappear. And that is true. But think about this, Pat. That island on wheels is technically personal property. That's technically not attached to the property. So that needs to be addressed. Buyer wants that island. When in doubt, write it in the contract. Have it in writing. Even our code of ethics says that all of our agreements have to be in writing. My big thing always is, in a contract, do not leave anything open for assumption. A contract needs to be worded in a way that there is no room for interpretation. It's got to be clear cut and dry. And David, I see that you're in here now. Bobby, would you quickly introduce David so that we can get to him when we need to?
So David Phillips has entered the room. David is a partner and shareholder and one of the founders over at Phillips Hayden LeBee. His practice focuses on what we do on a daily basis on real estate. I have worked with David and his partners quite a bit on several different occasions, and he has a wealth of knowledge when it comes to everything from our contracts to handling closings and title. So David, I don't know if you want to say a little bit about yourself, and then if you have any comments on that paragraph 1 subsection D that we've been talking about as far as fixtures that convey with the property.
Yes, absolutely. Can you hear me?
Yes, we can. And David, would you be
Okay.
so kind, after you get to take a little break, would you put your contact information in the chat so that people may reach out to you after our little seminar?
Of course.
Thank
Of course. And thank you all for having me this morning. So my name is David Phillips. I am a real estate attorney. We have offices in Clearwater and St. Petersburg, so we cover all of Pinellas County. Obviously, we handle closings and real estate transactions throughout the state as well. I write I've written for a number of title companies over my career, currently writing mainly with Fidelity in Chicago as my underwriters, just because of past relationships. And so I've got a very good relationship with underwriting attorneys at one. I would call Fidelity probably the largest or one of the largest underwriters in the country. So we rely on them as a resource as well. And you guys can rely on our firm and on our staff as a resource for some of your contract disputes as they come up. I do mainly transactional work. My partners handle litigation. Obviously, it's everybody's goal in a transaction to avoid litigation, but sometimes disputes do arise. And it's nice to know that you have someone that can back you up in those instances, or back one of your buyers or sellers up. But my business is basically handling a transaction from start to finish, including the title work and the closing and escrow. It's been a pleasure working with Bobby in the past, and look forward to helping anybody that might have questions today, kind of understand this form contract. It is it's a great contract in a lot of ways. I think a lot of real estate attorneys would say that, but there are also some flaws in it. And I think many of you might have encountered those. So to speak to Bobby's point about the personal property, as specific as you can get, both with inclusions and exclusions is probably your best bet. For instance, you might say all personal property included, which is on the property as of the date of execution or something to that effect, because I have seen a number of instances where personal property disappears between the time a contract is signed and between that time and your closing date. And it might just be an oversight by the seller. There might not be any bad intentions, but everybody should be on the same page. So I'll give you one example. I've seen a transaction where an outdoor rack system that was mounted to the side of a property that stored paddle boards and kayaks and water sports equipment, that was affixed to the real estate. It was mounted and attached to the outdoor wall, and that just disappeared before closing. But the buyer specifically wanted it, and that was one of the things that enticed them to this particular property, storing their kayaks and their paddle boards and such outside. It's a waterfront property, and that became a little bit of a sticking point for the parties at the closing. So it is always good, I think, to be as explicit with those personal property items as you can be, and the same with the exclusions. Anything that, as a seller and as an agent representing a seller, anything that your seller may want to specifically exclude, in my opinion, you're better off listing as best you can. So I will be here to answer any questions or to kind of give my thoughts on some provisions as they come up. So feel free to let me know when you have one.
David and Manuela,
appreciate you being here.
I think this might be a really good section to bring up an issue that we've been encountering quite a bit in our area, which is solar panels. Are those fixtures to a property? Do they convey with the property? Is a buyer obligated to assume a loan on those solar panels? What if they're leased? There's a whole host of questions that come along with those. And this subsection D, as far as personal property or what is fixtures, I think lends itself well to it, as well as some other areas in the contract. We see all too often, and I had one last year where we encountered this, where we were told verbally that the solar panels loan could be assumed by the buyers, or that the solar panels could be removed from the property. There was no reference to this in the contract. There was no addendum to this in the contract. And after buyer and seller had fully signed the purchase agreement, we were then asked to sign an addendum agreeing to, and the terms were, buyer agrees to assume seller's loan for solar panels at closing. And the buyer did not sign this because it was way too vague. We didn't know if that would disqualify him from his mortgage based on a debt to income. We didn't know the terms of the loan that he would be agreeing to assume, if the solar panel lender would allow him to assume it. And if he signed that addendum and the lender wouldn't, did that create a potential default on the buyer's end in the contract? There were so many variables there, not to mention he wasn't getting the tax credit for the solar panels. So he didn't want to assume a loan at a high interest rate for these solar panels. And his position was, they're fixed to the property. They convey, the seller needs to pay off that loan at closing in the absence of any other agreement. David, have you seen this come up? I know solar panels are at this point in our area where they're becoming a really hot button issue for both buyers and sellers as they're starting to transfer title to property.
That's a great point, Bobby. I have seen it come up. And the short answer is there is no perfect answer because it depends on the service provider, this solar panel provider. So I've seen one that was performed. The company that provided the panels was Vivint, who do a lot of smart home technology services. They do alarm systems. They offer these solar panels. Well, what they don't tell you is they subcontract that work out to another service provider, and it's all done state by state. So for instance, Vivint might have a contract with one service provider in Arizona and a whole different service provider in Florida, and they may actually subcontract that out by region. as well in the state. So you really don't know what you have until you have the installation performed as an owner. There's an incentive to install them with the tax credits, like you mentioned, and also with the energy savings over time. It takes quite a while to get to the point where you're going to recoup that initial cost when you factor in the amortization of your loan and all the things that you talked about. And so there is no perfect answer to the question, unfortunately. I think the key would be getting that contract, whether it's a lease, whether it's a finance agreement, and, an installment loan, whatever the contract is with the solar company, obtaining a copy of that during the inspection period and reviewing it in full is really critical, because the inspection period is your free look, right? And that's the period of time where, as a buyer, you really have the ability to understand what you're buying. And if you basically relied on your financing period to back out because you didn't like the terms of the solar panel finance contract, that might be getting into a gray area. So I think from a buyer's perspective, you want to understand what the solar contract looks like early on, and the seller needs to provide it, of course, but they may not provide it when the contract is signed. So yeah, I mean, to answer your question, there are assumable contracts, but of course the buyer would have to qualify as well.
So I think my question might be, if there are solar panels on a property, and there is no discussion of them and no agreement in the contract, providing that the buyer is assuming any debt for those solar panels, is there an obligation of the buyer to then assume the loan? Or if that loan has to be satisfied at closing, would that then fall back on the seller to satisfy that lien, since there is no agreement from the buyer to assume it? Just as any other they had a lien for.
That would be my interpretation of it. Now the problem is it's not going to show up in title necessarily, because sometimes there are no recorded notices of a lien. So unless the solar company that installed it did record either a notice of commencement, which they should, or if it's beyond the year period that the notice of commencement is effective, if the solar panels were installed 2 years ago, the notice of commencement wouldn't give you any indication that they were installed and there might be payments due. So unless the solar company then installed some kind of a lien right, whether it's a second mortgage or some kind of installment loan mortgage, unless they've recorded that, you would have no idea that there's a loan due at the closing from the review of title. So it's a little bit of a gray area in that regard. But yes, if the seller does not disclose fully that there's a loan that needs to be satisfied, then that should be satisfied out of the seller's proceeds. And in my opinion, then, if they didn't disclose it, the buyer should reap the benefit, so to speak, of the solar panels if fully paid off at the time of closing. They disclosed it, and it might be an additional amount that has to be either, discussed between the parties as additional consideration paid by the buyer, or perhaps lowering the sales price of the real estate and then increasing to account for the price paid for that additional personal property. I mean, they are affixed to the roof, so I would consider them fixtures. But again, they can be removed. The problem is, and this is one other reason why I shy away from them, personally, I shy away from them just because the people that install them, unless they're doing it really, really well, they can lead to roof leaks. They can lead to other issues. So unless they're done at the time you're installing a new roof, I've seen other problems arise just with leaking roofs, things like that. And depending on the type of roof, if it's shingle, that's one problem. If it's metal, it's another. So it's definitely something to watch out for.
So on that note, sorry, we have a question in here that says, if a loan is not disclosed fully about property not owned by seller, what can we do as agents to figure out how to avoid this before closing?
If a loan is not disclosed, and are we talking about a loan for the real estate or for the solar panel specifically?
So I'm assuming, but whoever transaction manager is, I don't know what your name is, solar panels.
Solar panel. Okay, I see. Yep. Yeah, I mean, if that's not disclosed, then again, I don't think the seller has the ability to close without paying it off in full. That would be my interpretation.
Correct, because it
there
shows
is
up as a lien. Yeah.
Correct. It would be a lien on the property. It may not be recorded, but it certainly is owed. And, you know, your title policy, this is another good point to bring up, I think, with regard to title. Your title policy, you know, might have exclusions in the boilerplate language for unrecorded liens such as that. So it's really important to make sure you understand exactly what your title insurance as a buyer will cover, because, you know, we generally would exclude from coverage things that we can't determine as a title agent, right? So if I, for instance, don't have a survey, then I cannot exclude, then I have to exclude from coverage matters that would be described and shown on a survey, okay? If we don't have the ability to determine from a review of public records or a municipal lien search that there are other liens associated with a property, then they might be excluded. So it is important to remember that you can't necessarily rely strictly on the title policy for this type of a claim. You definitely need, if you know there are solar panels on the roof, and you would obviously see them during a home inspection. So keep that in mind. If you do your home inspection and the solar panels were not known at the time you contracted, but you become aware of them after the inspection, it would be wise, I think, to ask the seller specifically if they have an outstanding lien on the house regarding the panels.
David, given the fact that standard E in the contract references that the seller shall furnish to buyer at closing an affidavit attesting to the absence of any financing statement, claims of lien, or potential lieners known to seller, and that there have been no improvements or repairs to the property for 90 days immediately preceding the closing date, if they are not disclosing that there are liens and there is one that they find out after the fact, would that be a default on the seller's part in the contract? And what would a buyer have potential repercussions or recourse because of that?
Yeah, you're exactly right, Bobby. That would be a seller default. The seller default would entitle the buyer to elect a certain remedy, whether that's terminating and keeping the deposit or seeking specific performance. Those are the two you normally see. At that point in a transaction, most buyers would have a hard choice to make. Do you want to walk away? Perhaps this is your dream home. You know, you found the one you wanted, and this hiccup arises. Specific performance is your, you know, I call it the hammer, right? It's the hammer in the toolbox, because you can use that as your leverage point, and it allows you to buy the house for the contracted price. Now, they would definitely be in default, in my opinion, by not disclosing that lien or that additional amount due to the solar contractor. And they could not sign, that's I think you hit the nail on the head. The seller's affidavit that a seller signs to ensure, and the reason they sign that, by the way, is twofold. Number one, it gives the buyer notice that they haven't done anything fishy. They haven't given any new mortgages or easements since the time you reviewed title as a buyer. But it also covers the closing agent in a certain way, because the closing agent can rely on those representations from the seller to issue the policy. So, for instance, if they've done work within 90 days of closing, but they haven't paid any of the subcontractors, and they sign the affidavit saying, I have not done work, then this closing agent wouldn't necessarily be on the hook, and the title company wouldn't be on the hook if there were a claim made on the policy for an unpaid lien. So the affidavit helps the buyer. It also helps the closing agent. And, you know, I think that's one of these standard forms that every closing agent has, of course. They're all slightly different. but they all serve the same purpose, which is to make sure the seller is being truthful. So to answer your question, if they did not disclose it, then yes, it would be a seller default, and there would be repercussions that the buyer could use to their advantage.
Thank you for that answer. That was wonderful. On this note, I would like to bring something up that Bobby and I were talking about yesterday. We now have seen some listing agents who are putting offer instructions in their attachments on the MLS. And I have to say, I absolutely think that is fantastic. And the reason why Bobby and I talked about this yesterday was that there are some agents who are offended by that, because they feel that the listing agent is dictating what kind of offer needs to be made. And I see that from a totally different side. We are in a market right now that is nothing other than ludicrous, insane, ridiculous, whatever you want to call it. I wouldn't want to buy a house right now because it is just a nightmare. So there are some listing agents now who put not only their seller disclosure and whatever else information we need in order to put a viable offer together, but they actually compile a list of offer instructions. And that would be a perfect place to say, do not submit an offer unless the buyer is willing to take over the existing loan on the solar panels, because the seller doesn't want to put them in a backpack and take them with. And I personally have to say, I just experienced that because I do have one under contract with solar panels. And I thought that was a complete plus because I happen to like green energy. I found it was very difficult. And we got 4 offers on the house where the buyer said they didn't want to assume the solar panels. Well, the seller didn't want to accept that offer. So if you put an offer instruction and attach it directly to your MLS, you can put in there, as we started out with, the legal names of the sellers that the buyer's agent usually wouldn't have. You can put in there who the closing agent is. You can put in there, seller is not going to look at an offer unless such and such, like for instance, assumption of solar panels is mentioned in there. And I responded to one the other day where I said, thank you so much for the showing instructions or for the offer instructions. I don't mean any disrespect, but I have to ask on behalf of my buyer, would they consider a VA loan? Because on the offer instructions, it only said cash and conventional. It's a really, really nice way of helping us streamline an offer that actually does have a chance, which might eliminate that this poor buyer is putting 15 offers on properties and we don't get any of them.
I want to follow up on that from 2 standpoints. From the listing agent standpoint, as a matter of best practices in CYA, I would always do that at the direction of the seller. Just like in your listing agreement where the seller can authorize you to withhold or present verbal offers or offers after they've already accepted one. If you are going to have specific things that the seller is not going to entertain, just like, again, there's a section in the listing agreement where they will entertain VA offers or FHA offers, I would have that as a written directive from the seller. The last thing I would want is a seller coming back to me saying, well, how come you didn't present this fantastic offer, $50,000 over asking price, because they weren't willing to assume a loan for solar panels when I could have paid it off because there was so much more money they were bringing to the table. So I would definitely do it at the directive of a written directive from the seller. And then the second side of that, and I'll ask David his opinion on that in just a second, but the second side of that is from a buyer's standpoint. We're, as a buyer's agent, we're competing with, in many cases, 15 or 20 offers right now. And I appreciate it when there are written instructions on how to present an offer, because I think the presentation is everything. So I can formulate my offer. I can formulate the email that goes with it, itemizing what I'm including in the offer, and make sure that mine is presented prettier than everybody else's because I'm reading what they're asking us to do. So I think it's a good opportunity to show that your buyer is exceptionally qualified and more qualified than the rest in a situation where they are willing to assume that loan for solar panels. ask the lender to include a statement in their pre-approval or as an addendum to their pre-approval that the buyer is also qualified based on their debt to income to assume additional debt beyond what that pre-approval letter states. Because as a listing agent, I would see that and say, okay, now I can eliminate that as a concern when presenting this offer. So I think we can use some of the restrictions that we're seeing agents put out there as far as presenting offers, assuming loans with solar panels as a benefit when we're competing in multiple offer situations.
And I would like to add to that, that I'm not really looking at them as restrictions, but you're absolutely right. If it is not on the directive of the seller, then the agent is grossly overstepping their bounds. So I was going with the assumption that we all are aware of it, that we are always operating under the directive of the seller or the buyer. But I would also like for you to keep in mind as the buyer's agent, my philosophy in life is you ask, you have a 50% chance of a yes. You don't ask, it's always 100% no. Just because the directives on the offers, on the offer directions does not include a certain loan, it doesn't hurt to pick up the phone and call that agent and say, this is what I have. Do you think that the seller would still entertain that? So it gives a good reason for dialogue. And in our technology world, we need to keep in mind that the personal touch cannot completely get lost. It is amazing how much you can already lay the land if you pick up the phone and have a professional conversation with the other agent. What was the question you wanted to ask David, Bobby?
Oh, it was just regarding his position on having that as a written directive from the sellers to make sure we're not overstepping our bounds when it comes to putting offer restrictions in the MLS.
Sure. I mean, I think the more you can do to, well, like you said, Bobby, it's somewhat of a CYA as well as the listing agent, but the more you can do to have the seller give you explicit direction and on what type of offers they want to receive and consider, I think the better you're going to be serving your client, your seller. So I guess give me one example, if you might, that we can maybe put to use here in that scenario. So, for instance, if you were going to write the MLS listing to say we're only accepting offers, which will use the solar panel example, which will consider purchasing the existing contract for the solar panels installed a year ago.
So it's
that
not,
something that,
David, it's not in the MLS per se. It is an attachment as a letter that ideally is signed by the seller. And it basically says, what does the seller look for? So when we list a piece of property, we usually ask the seller, what's your bottom line and what is it that you want? And right now, the sad part is that sellers have the total upper hand and they can ask for anything and everything. It's going to change again at some point. But when sellers see that houses sell in 2 days with 15 offers, they can literally ask for anything. So if you say, for instance, going back to the solar panels, seller will only entertain offers, or it doesn't make it, we shouldn't write it so restrictive. Seller is looking for an offer for a buyer to assume the solar panels. So I want for a little pointer to be out here, not only on what we're writing in offer instructions, but please also what we write as an addendum or as additional written in part of the contract. When you are in doubt whether what you're writing will actually hold up or not, please keep in mind, we can easily cross the line into practicing law without a license, or even if it doesn't go quite that far, we can eliminate a pre-printed paragraph in the contract that's been carefully put together by attorneys by writing something, filling something in on our own that would eliminate that paragraph and wouldn't hold up in court. So when you're writing something that you want in addition to that, please reach out to an attorney and ask them for the exact wording on that. Or as Bobby mentioned, reach out to the lender and make sure that the lender wouldn't have a beef with it. Because if we write something in the contract that the lender is not going to accept, then we have a wishy-washy piece of paper and not something that would actually go to closing.
This is one of the things I had mentioned to David previously. If there's an addendum that says buyer agrees to assume seller's loan for solar panels at closing, then buyer is agreeing to assume seller's loan for solar panels at closing. There's no provided the loan, has these terms, or provided the buyer qualifies. There's no caveat to that. It is what it is. And I think all too often we see this on not just addendums with that, but any addendum to the contract that is going to materially change the pre-printed terms in the original contract. And I think that as agents, we often, and I'm guilty of it as well, we start crafting language as if we are an attorney without the ability to actually do that. And it is either unlicensed practice of law or borderline unlicensed practice of law. David, what's your position on that? Because I know I've mentioned UPL quite a bit.
Yeah, no. So I've seen a lot in my time doing this. There's a fine line, right? Because sometimes you just need the simple language to get the deal closed. You just need something that's easily explained, that both parties understand, and you can easily write that either in section 20, the additional terms section, or in an addendum. There's nothing wrong with that at all. But then you sometimes encounter the situation where the wording does have to be precise, and you're better off having an attorney draft it. And again, I'm not saying that to try to, it's not a lead generating exercise for me. I'm not trying to pitch my services, but for instance, I'll give you one example. I had a closing recently for a client who was buying vacant. Well, there was one house on the property, but it was a large property that had one home on it. It was a homestead. He was subdividing it. They were going to subdivide the property into 3 or 4 parcels, each a buildable lot, while the property was under contract. Okay. I prepared an amendment and worked with the agent who had the listing on presenting it to the seller. The seller didn't want to sign what I prepared. The seller wanted it to be extremely simple, extremely easy to write, basically condensing a paragraph that I had written about the subdivision process and how it works and what the timeline would be. They wanted to condense that into basically one sentence. The problem is, if the subdivision hadn't worked out like we planned, then where do the parties go from there? Because it had ramifications with the earnest money, which was significant, and both parties, the seller and buyer, are better served when you can clearly explain what's intended. What was intended is, we're going to subdivide the property without having to replat it. We're just splitting the lots into their existing original platted lot lines. And I talked to the zoning director, and it was agreeable to the city. The problem is, if we didn't say all that, and we didn't specifically spell out the timeline for that to happen, if either party couldn't close, then what happens to that earnest money? So again, it's like Bobby said, there's a fine line between saying, we're going to do this, and having it understood by everybody what's intended, and then actually writing it in a way that could be enforced. And, again, it does, not every provision that you're writing in a contract, especially when you're dealing with the as-is form, needs to be drafted by an attorney. There's no doubt. Not all of them do. But you should know, I guess, is my answer. You should know when you reach a point, and everyone's got a different threshold probably, but you'll know when you reach your internal point where you say, this is above my level of comfort. This is probably where I need to consult a real estate attorney just to make sure that I'm helping my client. And that I guess that would be my advice, Bobby. everybody needs to know their own point of what I'll call point of no return, where they feel uncomfortable doing it.
Thank you, David. That's wonderful.
Manuela, do you want to take on paragraph 2, purchase price and escrow agents?
Absolutely right. So we want to make sure that we fill this out properly. And I am amazed sometimes on how something that simple gets messed up. Obviously, we want to put in here the purchase price of what the buyer is willing to offer and the deposit to be made. Now, we all know that right now we need to write strong offers. We need to write good offers. My big thing is always go make the escrow money count. This is escrow money is putting your money where your mouth is, walking the walk, talking the talk. You're buying a $700,000 property. Please don't put $2,000 escrow, $5,000 escrow. That does not tickle the seller at all. That escrow part shows I've actually got the money to buy this piece of property. There is no right amount. There are some areas not far from us where typical escrow is 10, 20%. There is no right or wrong, but there is a making things stronger. And I can tell you that the higher, for all of those of you who deal with sellers, the higher that escrow amount is, the more likely the seller will look with a more pleasant eye onto the rest of the offer. So if you suggest to the buyer, they're buying a $700,000 home, suggest to them to put in 30,000 in escrow, 50,000 in escrow, 20,000, whatever it is that they feel comfortable enough with parting temporarily. Please remember, it's a parting temporarily because in the end, it gets credited back to them. Then we mark in there that it is to be made within however many days. I never put a company's offer, but you do that any which way you want. Please put the escrow agent information in. I love it that the MLS now has a separate field where the escrow agent information is actually in there, and put that all together. So if the buyer says, oh, I'm not going to give you $50,000 escrow, you could always say, let's break it out. Let's do 25,000 in the beginning. And then under additional deposits, maybe after the inspection has been satisfied, you drop another 25,000. You could break it out really nicely. It goes a long way because it still comes out to a nice escrow amount. And then it says in here that we are going to finance, express a dollar amount or percentage. This is something where you choose, and oftentimes you may want to ask your broker how your broker wants to have it done, because different brokers want to have different things. I personally like to put in, if it's an 80% loan, I like to put in there 80%. And then on the bottom where it says balance to close, I would write in 20% minus whatever the escrow amount was that we have in it. Some brokers don't like that, and that's perfectly fine. There is a dollar amount on the bottom under balance to close, and that typically means you're supposed to put in a dollar amount. So we've had this discussion, and I think we need to ask David on that. A lot of agents write on line 40 here under E, balance to close, and they write in there simply balance or some, what was the other thing, Bobby, that we saw yesterday that somebody wrote in there?
I think what we saw was balance, or I think somebody wrote balance minus the EMD.
Something, but I'm looking at it, if there's a dollar amount, they're not looking for the word balance because it already is addressed at the beginning. What is your thought on that, David?
Yes, I like it when I see the actual amounts written out, especially even for the loan portion, because, and again, there's room for error, right? If you're going to go for an 80% loan, there's, I guess, someone could make a mistake and not use the full purchase price. They might use the price minus the deposit by mistake or something like that. But to me, it's always easier, especially when you're calculating that balance, to just calculate the 80%, add that loan figure to the section 2, and then, you know, do the math, right? So again, I'm with you completely on that. Rather than writing balance, which is duplicative, it already says balance to close. you're supposed to fill in the blank. It's always nice when you know what the amount is. And I guess there is some room for confusion, I guess, with a buyer not completely understanding that there are also loan costs and some closing costs and prorations that will change that number. So when they go to send their wire to the closing agent, it's not going to be the number from page 1 of the contract, of course.
Correct.
But that's the only room for error that might come up, in my opinion, because other than that, it's relatively straightforward. You're taking your purchase price, you're netting from that the deposit already paid, and you're netting from that the loan. So for page 1, I would say use all numbers rather than percentages, in my opinion.
Thank you. So now the thing that we need to pay attention to, we all know that it could be counted. And when it gets counted and the price goes up, please also make sure that you change those numbers. So now when you all of a sudden have 375 instead of 350, your 80% under financing obviously changes and your balance to close changes. And we see so many times that on the counter offer, we have an initial right next to the new purchase price, but the agents fail to also change line C and line E. It is crucial that you change that as well, because otherwise your contract is no longer really valid. And please, pretty please, I can't tell you how many times we see that there's an initial missing. If we have 2 sellers and 2 buyers, we need to have 4 initials on every change. We need to make sure that all of the initials are on there. If you're missing one, you technically do not have an enforceable contract. And we don't ever want to be in a position where we technically don't have to have an enforceable contract. I'm not saying that a slight mistake on a contract cannot get you to the closing table and beyond. But what I'm saying, and that's the important part here, if it didn't go to closing, but it went to court instead, the wrong C, right? We want the C for closing. We don't want the C for court. If there is a technical mistake on that contract that could cost your customer dearly, and ultimately it could cost you dearly because they will probably turn around and put it on you. Our job as agents is to make sure that the contract is in its full legality and that it gets carried through to closing as agreed upon. That's the important part. If we don't put something in the contract that will hold up in court, and then somewhere down the road there is a mistake with it, it's possible that it can be fixed, but on the other hand, both parties have to agree to that. And if both parties don't agree, you might end up being in a serious, serious disadvantage. So for newer agents or for agents that don't really write offers all that many times, don't be afraid to ask somebody to look it over. That's the job of your broker. That's why some of you have transaction coordinators who are absolutely drilled to make sure that everything is done right. Do not hesitate to have somebody else look it over. It is very, very important.
Now, Manuela, one of the things I've seen in some of the Facebook groups, and especially since we have a lot of newer agents who have gotten in the business in recent years, escrow agents, and whether or not the escrow agent has to be the closing agent. In many cases it is, but there's a lot of dialogue going on about that.
That is true. And we know that the escrow agent is simply the agent who holds the escrow. That does not necessarily have to be the closing agent. And if the broker holds escrow themselves, the escrow agent information would actually be the broker. So very, very good point. Escrow agent and closing agent is not synonymous. It can be the same, but it doesn't have to be.
So that being said, obviously there's two ways that an escrow dispute can play out depending on whether the escrow agent is a title company or it is a brokerage. Because if it is a broker, the broker's process for handling an escrow dispute often in cases is much different than what a title company is going to require. And I think this kind of plays in pretty well to the initial deposit. My way of handling a deposit is the second method that you presented, which is have an initial deposit that is impressive, but then an additional deposit after the inspection period, because the inspection period really is the buyer's due diligence period. But that doesn't necessarily mean, even though the contract dictates what's going to happen with that earnest money deposit, that a seller isn't going to dispute something. Whereas after that due diligence period, that inspection period in the as-is contract, now the buyer is solidified into this contract. So putting that additional deposit in is a more reasonable idea, in my opinion. That's how I like to handle it. Everybody's different. So with the fact that the escrow agent doesn't have to be the closing agent, David, can you comment on what I just elaborated on as far as earnest money disputes and how a title agent might handle that if they're the escrow?
Yeah, we kind of, I guess it's kind of an inside joke among closing agents that holding escrow is probably the worst part of the job, because it involves other people's money that might be held for quite a while, and it involves accepting checks oftentimes, which we like wire transfers, of course, for closings. And so you've got to make sure those checks clear and things like that. Normally not a problem, just, with foreign buyers, sometimes it's a challenge. But beyond that, just as far as the dispute is concerned, that's why we just don't like holding escrow at the end of the day, of course, but it's part of the job. There is no good resolution from the escrow agent's perspective when there's a dispute, because you have basically one option that usually would be the option that most agents would take, which is to post the money into the registry of the court. And then once you've done that, the seller and the buyer essentially make claims against the posted escrow money with the clerk of the court to receive that from the clerk's registry. And that's generally how a true dispute is resolved. You have to interplead, which is a court term. You have to interplead the case, which means you, as the escrow agent, you have to actually take initiative, prepare the interpleader action, file it with the court. There are some nominal filing fees. There's just a lot of work that goes into that. So, again, that normally doesn't happen. Normally the parties are able to come to some kind of an agreement, whether it's a splitting of the escrow in basically a settlement, or whether the buyer or seller retain the full deposit. But if it does go to a true dispute, and a lot of times you see that when the numbers are higher, right? So if it's a $50,000 escrow dispute, it's probably more likely that the parties would fight that rather than a $5,000 escrow dispute. But the posting to the registry of the court is never fun. And by the way, that never resolves itself quickly. So, once you've gotten to the court, now you can really wait, right? So you might wait a month to get there. And I liked the comment earlier. I think it was Manuela that made the comment, we want the one C, not the other. You don't want to end up in court, and you don't want to end up in the clerk's office. You want to end up at a closing. So, but if that's not an option, then yes, that is what would happen. And the escrow dispute doesn't get resolved quickly. So just kind of be ready for that. But I would say, Bobby, 95% of them resolve without a true dispute, from my experience. When I say that, 95% of original dispute escrows, not 95% of contracts.
Right.
Because I would say 95% of contracts close, or 90%. And of the ones that don't, and there's a dispute, it's even a smaller percentage. It's very rare. It's very rare. But there was one other point I was going to make regarding escrow. Oh, with posting escrow, to me, it's always preferable, especially with larger sums, when people can wire escrow to the escrow agent rather than dropping a check. It just helps with the timing, and especially these days where people aren't really attending physical closings as much, things like that. to me, it's just always easier if you can work with the escrow agent to try to get wire instructions to the buyer. It's just easier for people to make a wire transfer. I have seen over the past year, by the way, the vast majority of banks easing the ability for people to do wires. It used to be difficult in America, believe it or not. You had to go to your branch, you had to make an appointment sometimes. And even then, when you went to the branch to make the transfer, if the manager didn't authorize the wire when you signed the piece of paper you need to sign, sometimes it would sit on that person's desk for 3 or 4 hours, and it might not go out right away. So wires are always great, especially when you're talking about larger amounts, and they're instantaneous. So as soon as the bank presses the send button, the wire, generally within 15 or 20 minutes, will go through the Federal Reserve System to the closing agent or to the escrow agent. So those are always, it's always nice to make those larger deposits via wire.
Manuela.
And we want to stay out of the way on the wire instructions. Do not take the wiring instructions from the closing agent and pass it on. Have them skip you completely. Do not go and pass go and collect $200. We're going to let the closing agent know that they need to send the wiring instructions directly to the person sending the money. And please always make sure you give your customers that wire fraud addendum so that they get it pointed out to them before you hit the actual button, yes, let's release that money, that they pick up the phone one more time to call the recipient, verify the account number so that their money doesn't end up in Aruba. Right?
So that's such a great point, and I'll echo that. Sorry, Bobby, didn't mean to cut you off, but we're seeing.
Mandy, I love your comment because I was just about to say that.
It's such a good one, and I'll echo it again. We always send our wire instructions only to one person in an email. We always send it via secure email, so it comes through as an HTML attachment. They have to click on it to open it. Our service is provided by HP, Hewlett Packard, and it's relatively robust. So, we also tell people once you print the wire instructions and you're done with them, don't save them on your computer. Don't forward them to anybody, nothing like that. But yes, we always want to send them directly to the buyer. So that's a great point. The other thing I'll mention quickly is we're seeing 2 types of scams in our industry right now. They are extremely prevalent. And I'm not trying to make everyone nervous, but again, this is part of my job is the real estate side, and then the other part is dealing with the funds, right? And we take that extremely seriously, of course, but we're seeing 2 scams. And the first one is it's been around for a few years. It's someone that is essentially intercepting wire instructions with someone that's not sending them securely. And then they're taking them, they're modifying the PDF, they're typing in a new rack number, perhaps. They're basically duping the end user, the buyer, and sending them an email saying, here are my new wire instructions. Disregard the prior email you received, send the money to these instructions. That's been around for like 5 years or so, maybe more. The new one, which I've just started seeing in the past year, and this one is actually even scarier, is a buyer who doesn't even exist. And this is extremely prevalent these days. You may be contacted by someone because everybody knows, especially in Florida right now, the real estate market is extremely hot. And there are people posing as buyers, and their entire intention is to tie up the property and sign a contract because they know everything's now signed DocuSign. They will sign the contract. They will go through with physically signing it, okay? They will then terminate the contract during the inspection period. These are sophisticated scammers. So they know what the inspection period means and they use it. They will, in the meantime, send a fraudulent check to the escrow agent, okay, which is completely fraudulent. Sometimes a foreign check, sometimes a cashier's check, or it will claim to be a cashier's check drawn on an American bank account. That check will, of course, not clear. But in the meantime, once the escrow agent deposits it, they will terminate the contract and they will request that the money be sent back to them in a wire. And if that happens before that fraudulent check is found out, which, by the way, the banks have no liability at all. The banks have essentially, through congressional acts over the past 20 years, have essentially put all the liability on the account holder, so the escrow agent in that case. If their bank doesn't quickly act to determine it's a fraudulent check, which sometimes takes up to a month, then they will have the money back. The money will then be withdrawn from their account when the fraudulent check doesn't clear, and the escrow agent is essentially on the hook for the funds. But so beware of that. There are people nowadays posing. You'll never meet them. You may never talk to them on the phone. They'll encounter you just through email, and they will say, I'm a buyer. I'm ready to sign a contract. They might, and in this instance, they would say, I'm ready to buy a property sight unseen. I mean, that's what's happening. That's the new scam, and people are using COVID as the excuse to do that. So
it goes
just
back
be
to
aware.
the good old saying, if it sounds too good to be true, it probably is, because I'm assuming these buyers are also putting in a nice price tag and saying they want to buy at least a $600,000 house, not a little $200,000.
It's exactly right. They're all doing full asking price. Most of them pose as foreign buyers. I've seen a few of them, and I've talked about this with other closing agents as well. We've all seen the same. A lot of them are posing as if they're from Hong Kong. We've seen a couple from Europe. They're trying to pose as people who might not have the ability to come directly down to see the property.
Right.
It is not allowing me to come in. I can't get my visa, etc. So they're trying to explain why they can't physically be there. But that's the new scam.
I'd like to follow up on that. If you're paying attention to the chat, Mandy, for those of you who don't know Mandy owns a company called List to Close. So transaction management is what her team does. We work with her on all of our files, and one of her transaction coordinators who I work with, Lane, and I encountered this just last week with a non-local title company. But it can happen to anybody, where the buyer that I was working with, who is quite experienced in purchasing properties, both locally and, domestically and internationally. What he does for a living is auditing in the financial world. So he pays attention to everything. Received an email from the closing agent 3 days prior to closing with an attached closing statement that looked just like the preliminary statements we had been looking at, asking him to wire his funds to them prior to closing so that there was enough time for the funds to clear. And immediately he responded, thinking it was legitimate because they had copied the closing agent's email signature. Everything looked legitimate, except that rather than being an email from the title company, the email it came from was titledesk1@gmail.com. It was the only red flag in this, besides the fact that they were asking for non-final numbers to be wired several days before closing. And he responded to this person saying, I will wire funds once I have a final closing statement I can review. And this individual, or whoever the scammer was, went back and forth via email trying to convince him that he had to wire the funds now or this would not be able to close. And fortunately, I hadn't seen it, but the lender that we were working with said, this is coming from a Gmail account. It's likely a scam. So in addition to what is on email signatures, like Mandy said, I encourage every buyer I'm working with and sellers, never, even when you receive the wiring instructions from the closing agent, call them to verify them on the phone. Do not respond to that email to verify it. Respond to an email from earlier in the transaction with the closing agent, because that's more likely going to be an accurate email. Call them with a phone number that you're getting and obtaining on your own, not from the email signature. And when you're on the phone with a closing agent, ask them to respond to something that's somewhat personal that they might have in the file, whether it be a date of birth or a prior address or part of your driver's license number, something that is verifiable that can give you some assurance that they are the person handling the file, because wire fraud is so prevalent, and even the most astute and educated and on top of it buyers and agents that you know can fall victim of it.
And there's a good point right now in the chat. Don't use the phone number on that email either. Use the phone number that you were given in the beginning of your closing agent, not the phone number that's on that particular email. And David said it earlier, and I don't know if you caught that. He said that it usually comes, the wire instructions come in an encrypted email. They don't usually come from something like a Yahoo account, a Gmail account. AOL is still out there, I'm amazed. So please, let's make sure that our buyers are not losing money. We've seen plenty of cases in Pinellas County where the money actually was lost. And from what I understand, the FBI has absolutely no recourse once 24 hours have gone by. That money is irretrievably lost. And the sad part is, most of these scammers are so sophisticated. They might know these contracts better than we do. They really put a lot of effort into doing this in a beautiful way. So we need to be very, very careful with that. All right, let's move on to you.
Well, speaking of the contract, before we move on,
they're getting way more sophisticated. So just be aware. Just keep your eyes peeled.
Right.
I want to bring up one more thing in this section real quick, Manuela, because it's going to tie into the buyer default section when we get there. I have heard and seen sometimes in some of the lovely groups that we're all a part of online, a misconception as to whether or not a contract still exists if a buyer does not deposit the earnest money deposit by the deadline in the contract. There are a lot of agents that feel that if the buyer did not deposit it, the contract just doesn't exist and everybody can walk away free and clear. So do you want to elaborate on that?
Well, that's not true, because that simply means the buyer is in default. And when the buyer is in default, then the seller has the option to still go through or to cancel the contract, but the contract is not automatically canceled. So there's a big difference between a canceled contract and a contract that is in default, because something needs to be done to this first before it gets to be canceled.
Right. It becomes voidable by the seller, but also enforceable by the seller.
And that is going back to Real Estate Basics 101. We all learned that in our basic course. So on this note, I would like to take a quick 10-minute break. And then we're going to have Bobby go into time for acceptance, closing date, and extension of closing date, which so often gets us into confusions. So let's resume here in 10 minutes. This way you can do what you need to do, answer phone calls, emails, and hopefully we will see you back in 10 minutes.
Thank you.
Okay, welcome back. I had to look first when I started the 10 minutes because I wasn't really paying attention to that. Got another 2 minutes for people to come back. You could, in the meantime, if you wanted to, unmute yourself, say hi to some of the people that you may know on this call. Let's put a little bit of a social effect in on this.
Hi, Manuela. I just want to thank you for the invite today.
Hey, Michelle, how are you?
I'm good, thank you.
Good, wonderful. I see Stephanie's on this call. I see Kat's on this call. Sylvia, hi, Sylvia, how are you? They're still on break, busily talking to customers, writing up contracts. Okay, David is back. We are at 10:37, so our 10 minutes are up. Okay, we're just waiting for Bobby to come back. Hello, David, and thank you for joining us for this today. We really, really appreciate it because it is always nice to have as a backup the actual voice of the law, where as realtors, we always have to be careful that when somebody asks us what our opinion is on something, we always tell people that we shouldn't be giving our opinion. We should be giving our knowledge that hopefully we can back up with wisdom, whether it's in writing or with the proper professional at the other end. So we really, really appreciate you taking 3 hours out of your time and doing this for us. I don't
Absolutely happy to do it.
yet to put your contact information into the chat, but we would really like for you to do that because we're firm believers, both Bobby and I, that we want to support people who support us. And we get asked all the time if we need a good real estate attorney. I prefer to do business with people that I know. And I'm very, very big, just like Bobby, into building relationships. It makes a big difference on whether you have good relationships with professionals out there. And it also has something to do with how well an offer of yours may be perceived by the listing agent and the seller. So it is important. On that note, we are so thrilled, and I know I can speak for Bobby and I, that you are all on this call with us. supporting our new venture of Elite Real Estate Academy. We both were teaching for a local real estate school before. That local real estate school got bought out by a large corporation. So we are filling what we are hoping a void, not only in being a local provider of quality education, but we have this different aspect in it that we are working on. It needs to be finalized by Dearborn, but it's almost there, offering hybrid classes. We find that doing a Zoom class or online streaming class in general for 3 days, 4 days, 2 weeks from 8 to 5 every day is just nothing other than a nightmare, because it just gets to be stressful for the student as well as for the instructor. So our hybrid portions that we are going to be offering here in the very, very near future are basically a combination of you do your classes online at your own pace for the most part, but those chapters that the students have more trouble with, and we know which ones those are. I've been teaching broker courses for 17 years and broker post-licensing courses. Bobby specializes on the 45 post-licensing. We know where students are struggling with. Those portions we're offering in 3-hour Zoom segments. 3 hours bite-sized, we can handle that. So you basically get your instructor into your own living room, and we are also recording those segments so you can, for people who sign up with a course with us, they can see those segments in our video library. It is not all the way there yet, because Dearborn was explaining to Bobby that no other school has done that yet. So they're building a separate type of portal for us just so that we can offer that. And we are ultra, ultra excited about this. Okay, Bobby, time for acceptance of offer and counter offers, closing date and extension of closing date. It's all yours.
Time for acceptance. So in this section, we're in a market right now where everybody has to play by the seller's rules for the most part. However, when working with buyers, we're giving, a time for acceptance, oftentimes that is a short period, because we're wanting to prevent a situation where either that seller is going to shop the offer that we're presenting, or we want to give them some sort of pressure to accept our offer as quickly as possible to avoid a bidding war. That is a great idea. However, we also know that if a buyer really wants a home, and most sellers know this in this market, they're going to play by the seller's rules. So a couple of things to touch on this. One, when you give a time frame for acceptance, after that time frame expires, that offer no longer exists. So from a listing agent standpoint, not responding to that offer by the deadline provided for the time for acceptance, or asking the buyer's agent to revise that and extend that time frame for acceptance, you are risking the fact that that offer no longer exists. Now, that's the contract versus the reality, which we know buyers are going to play by seller's rules in most cases, but it's important to know that, the timeframes and deadlines we put in these contracts do actually mean something. They are actually important. So if you have a time frame for acceptance, that is the time frame for acceptance. It no longer exists after that time period. On the closing date, it is important when you're presenting an offer to have a closing date that is realistic. If the buyer is financing, you want to make sure that the lender can accommodate that closing date. I have seen plenty of offers come over where the timeframes seem absolutely crazy. And I always confirm with the lender, if I'm representing the seller, I talk to the buyer's lender to find out, are these realistic? Do you think you can accommodate them? Because you want to avoid extensions as much as possible. And we all know that there are some lenders out there that just don't care about deadlines and contracts. That leads me into the extension of the closing date, which is one of the most important, one of the most common addendums that I see when it comes to our contracts. When you're extending a closing date, it's important to pay attention to the other deadlines in the contract. Simply extending the closing date does not extend other deadlines, such as your loan approval period, time frame for the seller to provide flood information, Any of the other deadlines in the contract are not automatically extended because you have extended the closing date. I had one last year where there were several issues that happened along the timeframes of the contract. One of which was the agent not understanding how we calculated time in the contract that was related to the inspection period. And then the second was after that inspection period had lapsed, when we extended a closing date, they did not request that we extend the loan approval period. And by not delivering loan approval by that time frame, they essentially waived their financing contingency. So it's important to remember when you are doing things such as the extension of the closing date that you are paying attention to the other deadlines in the contract and whether or not those need to be extended as well. Manuela, do you have anything to add to that?
No, I think you covered it all. Hang on, there's something in the chat. I'm going to check that in the meantime. Nope. Yes, please mention the problem of having approval coinciding with closing date. Good comment, Kat. Thank you. That is so true, because we see sometimes that people are putting dates in that really don't correspond well with other dates. If you leave something blank, there is a suggested time frame in parentheses. I am a big opponent of leaving anything blank, because I have two philosophies on leaving something blank. A, it could be that it was completely missed. So it's possible that somebody didn't even really pay attention to that particular paragraph or that particular line. But then the other thing is, I do believe, and this could simply be just my opinion, there's no scientific, there's no science behind it. I believe it invites a counter. If I leave something blank and now the seller is countering anyway, having a blank space invites them to write something else in. At least I think so. So we want to make sure that we write something in, and especially if I'm thinking that that's Kat's point, if we are closing in 28 days, it's ridiculous to have a 30-day time frame for our mortgage approval. So let's make sure that the time frames actually complement each other. And Kat agrees 100%. So we covered that aspect. Thank you for that input. That was very good. By all means, this is an interactive, but this is not a class per se where you as the students have to be quiet. It is interactive. We ask for you to be muted simply for the fact that it's not a complete disaster, but put your comments, put your questions in the chat. We know that a lot of you on this call are very seasoned agents, which I am so thrilled over. When we saw the names for the registrations, we were really excited. So put your input in, because you may touch on something that we're completely forgetting.
I love this comment that having contradicting information by leaving blanks brings other aspects of the contract into question, or I might say may bring other aspects of the contract into question. I know that this issue of having a closing date that might be 28 days and loan approval of 30 days is probably on the top 3 list of my transaction coordinator's pet peeves. Mm-hmm. Anytime we see it, it drives her absolutely crazy, especially because just on face value, when you're sending that list of deadlines to the other parties, it looks ridiculous. So just from an aesthetic perspective, it looks ridiculous, but also the fact that it doesn't make any sense and it could cause other aspects of the contract to come into question, because that loan approval does need to be there in order to close. Right.
And the thing is, if you are already looking at an offer from somebody where you're like, oh my God, look at what they did, the respect value is somewhat in question, isn't it? So Kat says, I was taught to always complete the blanks, even with the default, to avoid someone altering something without you noticing. Absolutely right. And I've been preaching that from day one. Put something in there. And oftentimes those suggested timeframes are really good suggestions. You may run with them. The attorneys who've put this together gave it some thought. I don't know how many of you know how the contract actually comes about. For those of you who were registered for the virtual convention that we just had last month, I always like to go on the segment realtor attorney segment. And this time they were talking about, it was a 1 hour segment or so. It was really not too long. They are in the process of making some changes to our contract. It will have to get approved in August at the Florida Realtor Convention. And some of the changes that they're going to make to this contract are really, really good, because they're taking a couple of the things out that could be open for interpretation. One of the things they're talking about, for instance, on financing, which we can go into later here in a minute anyway. Financing, we see now that some of the buyers are simply marking that the contract is going to be for cash, because they feel that if they say they're going to finance, they're not going to get that offer accepted, and therefore they're simply marking cash. When Bobby was referencing to some of these realtor groups that we were all on social media, I am blown away at times when advice is out there where literally one realtor is saying to another realtor, just give away the farm. And they don't say it like that, but they say, take out the appraisal contingency and take out the financing contingency and take this out and take that out and so on and so forth, just to get that offer, and then change it down the road. And right now that is possible. You can submit an offer that says cash, and then you can, the seller or the buyer can still go and get financing. That's perfectly fine. They are not protected under financing contingency, but they can do that. The way they're going to change that, if it goes through, and I think it will, on the new contract that'll come out at the end of the year, will be that that option will no longer be given. And I think that that's a good idea, because it's somewhat misleading to the seller and it causes completely other issues. So when they put the new contract together, here are attorneys from Florida Realtors, but they were also discussing that with the input of realtors. It's a realtor attorney corroboration, and they are giving some real thought to these timelines. So don't leave something blank. If you agree with the suggested timeline in parentheses, just simply put it in there.
I'd like to elaborate on that for a moment, Manuela. You're absolutely correct in that if the offer and the contract is a cash offer and a cash contract with no financing contingency, that does not prevent the buyer from purchasing with financing, obtaining financing, attempting to obtain financing. They're just not protected under any of the financing clauses or protections in the contract. However, I believe there is an ethical obligation that we have to present the offer as it's intended. And if we know that the buyer intends on financing, but we are presenting it as a cash offer, I believe that we have a professional obligation to state that when we're presenting the offer. And also making sure that the buyer understands that, at the end of the day, they have to close based on the terms of the contract, whether or not that financing comes through. I have found that when I present an offer that way, that we are making the cash offer, here's the buyer's ability to present it however they intend on trying to finance, but they recognize that this offer is not contingent upon that financing. That goes a long way with the listing agent versus them finding out after the fact that the buyer intends on financing. Sometimes the buyer surprises you and changes their mind, which can happen. But yes, Catherine, I believe it would be misrepresentation to present it as a cash offer and not letting the other agent know that the buyer intends on financing, if that is the intent.
Absolutely right. Yeah. So talk about financing. When we mark on there that buyer will pay cash for the purchase of the property at closing, it simply says that there is not a financing contingency to the buyer's obligation to close. But it does specifically point out there that if the buyer obtains a loan for any part of the purchase price of the property, buyer acknowledges that any terms and conditions imposed by buyer's lender shall not affect or extend the buyer's obligation. So it does not prohibit for the buyer to get a loan. If you want to have that buyer now fall under financing contingency, that would require an addendum signed by all parties, which at that point you might not get from the seller, because the seller might rightfully say, yeah, that was not the bargain that we entered into. And anything that you're trying to negotiate after the contract has been signed and solidified is something that we cannot guarantee to either party, because either party can say yay or nay. Goes right back to you ask, you have a 50% chance of getting a yes. If we're marking that our buyer is getting a loan, and anytime we know that the buyer needs to get a loan, we better mark that the contract is contingent upon buyer obtaining approval of a, and then we have different boxes to choose from. I've had buyer's agent argue that it's none of the seller's business what kind of loan they are going to get. And that is one of the most ridiculous comments that I hear when it comes to financing. The seller has every right to know, what am I getting myself into? We all know that FHA and VA loans have stricter requirements on the property. The house itself might not even be qualified to be financeable with an FHA or a VA loan. The roof may not have enough life on it, and the seller has every right to know that. Where that comes in play quite often, and right now that's probably not even really an issue, but when we have a buyer who's getting an FHA loan and first-time home buyer closing cost contribution from another source, that always extends closing, and that always puts other stipulations in. You need to let the seller know if there is financing that goes above and beyond standard financing, if there are closing cost contributions from first-time home buyer programs, etc. We need to lay all the cards on the table.
This brings up a really good point, Manuela. A lot of times agents don't realize that, one part of the contract ties directly into the other. And on the first page of the contract, where we have the financial terms as far as the purchase price and the amount being financed, that directly ties into Section 8 of the contract here. These are the terms that the buyer and the seller are agreeing upon. The seller and buyer are agreeing upon, for example, that the buyer is purchasing with financing 80% with a conventional loan at not to exceed this specific interest rate, at a fixed rate. These are the terms that are agreed upon. If the buyer were to apply for an FHA loan, for example, and not a conventional loan, they are not adhering to the terms of the contract, and a denial of financing, it's my opinion, would not matter at that point because the buyer is in default. And I had this last year where not only did the loan approval period pass, but on an email chain, the lender said, would you like me to send a letter denying the loan so that the buyer can get their earnest money deposit back? And I was on the email chain and I responded with, haha, that's not how this works. Because it's not how it works. And not only that, but the loan denial referenced a certain percentage that was being financed, which is what the buyer applied for, which was not what was agreed upon in the contract. And David, I'd be curious your opinion on that, knowing that this would likely go to, a mediation or an interpleading with the courts. To me, I always feel that a judge is not going to look outside the confines of the contract for intent. They're going to look at the language of the contract. And if the buyer did not apply for a loan based on the terms agreed upon, just because they applied for financing, that's not following the terms of the contract. Are you of a different opinion or the same opinion?
I completely agree. It's exactly why the contract has all the boxes to check in the financing section. So, traditional loan, FHA, VA, et cetera. And even, as to the rate of interest that they're seeking. So again, there are default provisions that apply if you don't fill in some of the blanks. So prevailing market rate of interest, things like that. But you definitely want to make sure that those boxes are appropriately checked, specifically with the financing contingency, like you said, Bobby. If the buyer checked the box saying I'm applying for a traditional loan, but they're looking for an FHA loan with virtually no money down, that's a whole different loan approval. And if that was the loan that they ultimately applied for, but the contract didn't say that, then they're going to have a hard time explaining to the court why they should be entitled to a return of their escrow money. I'll make one quick point, by the way, on the disputes. I meant to mention this earlier, and this was a point I couldn't recall when we were talking about the earnest money. It is not an open and shut case, by the way, that as a seller, if the buyer misses their deadline, you automatically get the earnest money. That is a misconception. The Florida case law does not bear that out. I hate to say that. It kind of makes you wonder as a lawyer or as an agent why there are deadlines in a contract if you're not held to them. But basically, you have to have damages that arise from their failure to meet a deadline in order to claim the deposit. So just to give you an example, if you were helping a seller and the inspection period was 15 days and they failed to give notice on the 15th day that they were terminating, they gave notice the next day. Unless you can prove that you suffered some type of damage, like you lost another contract or that you potentially lost a higher price to another buyer in the meantime, that wasn't going to be a backup offer, but that was just going to be a primary offer, it's going to be really hard to claim that the failure to give notice and missing the deadline by a day should entitle you to claim the whole deposit. So going back to that whole escrow dispute issue, it's kind of what I mentioned is there's two reasons why we hate it. Number one is the contract can be as clear as day, and especially going back to this financing contingency, it can be as clear as day. But, I'll piggyback on Manuela's comment about 50%. I like to say, and I'm not a litigator, so I can kind of poke fun at our industry in a sense because I don't do this, but when you go into the court, you can have the best case possible and it's still a 50-50 chance, right? Because you're going in front of a judge or a jury and you don't know how they're going to feel or decide that day. And even if the case law is on your side, you might not have the best result. So yeah, I think that the more specific those provisions can be, the better. And even if you have a perfect contract with the right financing contingency boxes checked, keep in mind that there is always that wiggle room for that buyer to get out, even if they didn't apply for the exact loan they wanted to, just like if they missed the inspection period by a day. The courts are very reluctant to steal the money from a buyer and give it to the seller. I hate to say it. We all probably don't want to hear that, but it's just the courts will weigh sometimes the equity and fairness of a transaction over the legal black and white in a contract.
That's a very, very good comment. I've always told people, and that's without the legal background, it always depends on how well one attorney argues versus the other and which side of the bed the judge got up this morning.
Yep.
David, I often tell buyers that, one of the reasons I pay so much attention to the deadlines in the contract is not just because it's what it's agreed upon, but it costs a buyer a lot more if that earnest money deposit is disputed versus a seller. It doesn't prevent a seller from selling the property just because there is an earnest money deposit dispute going on. It doesn't cost them a whole lot, especially if it's a lot of money being disputed, to dispute it until you start getting to that, mediation and court process. But it being held hostage can prevent a buyer from moving forward on another property, especially if it's a substantial amount that is painful. So from a buyer's agent perspective, I never want to be in a situation where we miss an inspection period by a day or an hour, because in my opinion, it's a lot more painful to go through that process as a buyer than it is as a seller.
That is a very solid point. Yeah.
I couldn't agree more. That's so smart. I mean, when I represent someone who's buying commercial property and they have large deposits at stake, to give you an example, those are the situations that I lose sleep over as their attorney, because my client, who may be a big developer or have a lot of experience, they may miss the date. And it's part of our job as the people handling the transaction, whether you're an agent or a lawyer. We're there kind of to accommodate the buyer or the client, whatever we call the person. We're there to help them remember things, because they're dealing with 10 other things involved in that transaction. So I'm completely with you on that. Those are the deadlines and deposit due dates and things like that are what make me kind of wake up in the middle of the night thinking about, what's the date on this one? Let me look at my calendar. It's a good habit and it's a best practice, I think, to try to calendar those dates for your customers, as I do for my clients. It might not be my responsibility, but it's certainly something that is an added benefit to me helping represent that person, that I can remind them of dates and make sure they're keeping them in their calendar and then on their mind. But yeah, you certainly don't want to miss them. I mean, litigation is the worst case scenario when you're trying to close, right? So getting into a fight over whether you missed it by a day and there were actual damages to the seller, like you said, Bobby, if your buyer has $50,000 of escrow money tied up, and that might be their savings that they're going to put toward this new beautiful home they're looking to buy, they might not be able to go in with a strong offer on the next purchase. Whether or not they get the money back is irrelevant if they can't buy a house in the meantime.
Yeah, and that makes so much sense. That's why I think it is so important that for people who have lost contracts over timelines, my God, go and invest the money in a TC, because a TC will most likely prevent that from happening. And then I found it quite fascinating. I had an agent say to me one day, "Oh, I am absolutely offended by the listing agent." The listing agent put an email together with a timeline and had both of them sign, the listing agent and the buyer's agent. So it said on their contract effective date, such and such date, the time for escrow deposit, and it had all the timelines that we had when the inspection period was over, et cetera, et cetera. And then it said underneath, if we both agree with those timelines, both sign. I thought that was a wonderful courtesy thing, because that's what TCs do also. They put timelines together for everybody. It's a very, very good thing. I want to address the question that we have here in the chat. We did not ignore you. The question says, what if the buyers are taking a loan on a second property to purchase this property? So technically, when a buyer says, I'm paying cash for this house that they have an offer in with you, that does not necessarily have to be cash. It could be coming from someplace else. So it could be that they're taking a loan on a second property. But my word of warning on that is, make sure that they are absolutely clear that they are getting that loan on that second property. Because I ran into this not too long ago with somebody who said that they were going to get a home equity line on another property that they have in order to purchase this little investment property, and their home equity line didn't go through. The lender, they thought it was just a slam dunk, no big deal, but the lender did not give them a home equity line. So then we had to switch over to financing, and the seller was not going to go with that. So in the end, the buyers lost the property. So if people say, we're buying this one cash, but we're pulling the cash out of another piece of real estate that we do have, make sure that they're a strong enough buyer that they actually know that they're getting the cash out of the other property, because technically it is a cash transaction. So let's go look at the financing contingency, because according to our attorneys at Florida Realtor, those lovely people that also man our legal hotline, and I sure hope that you all have the number for Florida Legal Hotline programmed in your phone. And if you don't, put that in the chat, and I will put it in the chat for you when Bobby talks about his next segment. But for right now, let's talk about the financing contingency, because it says the contract is contingent upon a certain type of financing, where you can mark the what type of interest rate, if it's fixed, adjustable, not to exceed, etc., and the term. We all know that. Buyer shall make loan application within a certain time frame. And again, we have a suggestion of 5 days. I actually like to put 3 days in there, because I don't take a buyer out unless they're pre-approved anyway. And I want for them to get their butts in motion and now simply pick up the phone and say to their lender, okay, now let's make it an official loan application, because we actually found a piece of property. So you can tighten that down to 3 days. There should be no problem at all. Just don't leave it blank. And then it says that we are getting that loan approval, which requires a condition related to the sale by buyer of other property shall not be deemed loan approval for purposes of this subparagraph. Now, we know that right now we have a hard time with an offer anyway. If we're submitting an offer that, well, our buyer has to sell their property first, but it may not even be under contract, we probably don't get anywhere with this right now at all. If our buyer is selling property and they need the proceeds from that sale for this loan approval, remember that there is an exclusion here. And on that note, if you submit an offer where your buyer needs to sell their property in order to purchase the new property, please be so kind and give a copy of their purchase contract on their property to the listing agent, because the seller has the right to be fully informed on what the status is of the buyer's sale on their property. And I find it fascinating that agents argue with this. If you're looking at the addendum that says sale of buyer's property, it is specifically pointed out. So then when Margie Grant was giving a presentation at Florida Realtors a couple of years back, and she pointed out that the financing contingency is by far the most abused contingency on our contract. Because just like what Bobby said earlier, well, we're just going to contact the lender and say, write us a denial letter. It says in here, buyer's failure to use diligent effort. And diligent effort includes, but is not limited to, timely furnishing all documents and information, paying of all fees and charges requested by their broker and lender in connection with their loan application. So when you as the listing agent get this denial letter from the buyer's lender, you have absolutely the full right to contact that lender and said, lender, why are you denying this buyer's loan application? And then they might tell you, well, they stopped sending us documents. Ha, that is not diligent effort. They didn't pay for whatever, the appraisal or whatever it might be. Well, that's not diligent effort. So that would eliminate that. Diligent effort literally means that you are turning over every rock. You're exploring every possibility. You're jumping through burning hoops like a circus tiger in order to get that buyer to purchase that property. And when you look at it, we do that for those people who are marginal with their loan approval, and we're feverishly fighting for them so that they get that house because they absolutely want that house. Those people who now decide, yeah, well, we're past the inspection period, so we can't take that as an out any longer. We're just going to work with a loan denial now. They are not trying to diligently get that loan. They are looking for a way out. And if you are an agent who supports that, you will get a lousy reputation faster than you would want to think in this industry, because you may be submitting an offer to somebody and they might say, oh yeah, well, that particular agent is known for using every possible out on a contract to weasel their way out. So let's not do that. We also don't, as buyer's agent, want to waste our time with buyers who want to weasel their way out. We need to make sure that we explain to them that we need to bring that contract as agreed upon to closing. It is not about the warm and fuzzy. It is not about personal situations. They may not want to buy this any longer. They may all of a sudden have a situation in their life where that might not actually be a good thing any longer. It may be really, really daunting on a human side. Husband and wife want to purchase this property together. Something happens 10 days before closing. They are now heading for a divorce court. That was not part of the plan. Well, that's all wonderful and great, and it touches our heartstrings, but ultimately it's got nothing to do with the contract. And that's the part that we need to bring across in a unemotional way. Our job as realtors is to keep the emotions out of the contract. Our job at this point is to make sure that the agreed upon conditions and terms that we have in the contract get carried through. So let's not get into any kind of situation where we're abusing the loan approval. When somebody does not get loan approval by their loan approval period, that's when we run into issues all the time. because it says specifically in here that buyer shall keep seller and broker fully informed about the status of the loan application, the loan approval, loan processing, and authorizes the buyer's mortgage broker, lender, and closing agent to disclose such status. So we need to make sure on the buyer side that we keep the seller's agent fully informed. Upon buyer obtaining loan approval, we promptly deliver written notice of such approval to seller. I can tell you, and you can probably back me up on that, most agents don't do that. They don't even bother letting you know that, hey, we've obtained loan approval, hallelujah. I like to let the other agent know, by the way, inspection was satisfactory, buyer is not making any repair requests, and this could be, we have an inspection period of 10 days and we've completed inspection in 5 days and buyer is happy. Make the listing agent happy, let them shine in front of their seller. The sellers are sweating the inspection period because that's literally your buyer's get out of jail free card. They can get out of that contract. If now they know, oh wow, that inspection period has been lifted officially, let the listing agent know. If the appraisal came back and it's good, let the listing agent know. That's the other part the seller is sweating. And if loan approval has been received, let the agent know. It says right in here, promptly deliver written notice of such approval to the seller. We don't give it to the seller directly, we give it to the listing agent. And then an important part is if buyer is unable to obtain loan approval after the exercise of diligent effort, then at any time prior to expiration of loan approval, and that prior to expiration of loan approval period should be in red bold letters. Buyer may provide written notice to the seller stating that buyer has been unable to obtain loan approval. And now they have to make a choice. They will either waive that loan approval, in which event this contract will continue as if loan approval had been obtained, or they terminate this contract. Not doing anything is not a choice, because if they don't do anything, then it will automatically be as if they waived it. So the next part says, if buyer fails to timely deliver either notice provided in paragraph 8b, to seller prior to expiration of loan approval shall automatically be deemed waived. So not doing anything is not a choice. And the buyer may not know that. Buyers don't read this contract line by line like we do. We as their agents need to point that out to them and advise them, buyer, we have to do something. You have to make a decision. Are you going to chance it now that you may get that loan approved 2 days down the road? What happens if you don't? Because now you may end up losing your escrow money. You are officially out of contract because you can't purchase. Or do you cancel that contract? But you have to do something. If the contract is timely terminated, buyer is not in default under the terms, then they get their deposit back. We don't have to take it to court. It is right here in the paragraph. If loan approval has been obtained or deemed to have been obtained as provided above, and buyer fails to close this contract, then the deposit shall be paid to seller. So this is an aspect where we don't have to go to court. We won't need to go to David. We're simply looking at the contract. It spells it right out in here. What happens if loan approval has not been obtained? Bobby, you want to add something to that?
I do, and this ties right into what I was saying about extending the closing date. So if we extend the closing date 15 days, and originally our loan approval coincided with the original closing date, and we don't extend that loan approval, then what happens per the terms of this contract is that if we don't deliver loan approval, written loan approval by the date agreed upon, then loan approval is deemed waived and the contract proceeds as if loan approval had been received. So you're essentially waiving your financing contingency at that point by not extending the loan approval period when you extend the closing date if loan approval hasn't been received. And simply having a denial letter from the lender a day before closing, if it's outside of that loan approval period, is not a protection when it comes to this financing contingency. And that's something I hear so often from especially newer agents when they tell buyers, don't worry, you have a financing contingency. You can get out, you have a financing contingency. And you could not be further from the truth with that. So it's really, really important to pay attention to this. And I'm going to refer to it as a nightmare contract I had last year, where there were several deadlines that had been missed in that particular contract. One of those was the loan approval period. And that was one of the assertions that the seller made when making a claim against the earnest money deposit, was that, one, the buyer waited until long after the inspection period to order the appraisal because they were still trying to figure some things out. So seller didn't feel that the buyer was making diligent effort in obtaining the loan. But then also that loan approval deadline had passed. Therefore, the seller deemed loan approval as waived, and the contract proceeded as if it had been received. So we took the position that there was no longer a financing contingency. And fortunately, we got that to closing because we had agents on both sides that really wanted to find an equitable resolution, but that's not always the case. And so it's really important to pay attention to that. It's each of these paragraphs ties into one another in some way.
Absolutely right. So we have a comment here from Tammy. It says, I find it hard to believe a lender is going to disclose that type of information. Tammy, would you specify what type of information you're referring to? Because I would like to comment on it, but at this point I can't.
If it's regarding the status of the loan, or when appraisal was ordered, or if the buyer has made diligent effort in returning documents, the buyer is agreeing to allow the lender to release that information in the contract. Anything
that is relevant to that contract to close has to be delivered by the lender. And a good lender knows that. If a lender is refusing to give that information, then you are simply not going to argue with them, but you are reading them the paragraph of the contract. I found that so many times, being that I'm the managing broker of 40 agents, I get into situations quite a bit where people ask me questions where it's like, okay, so now I need to get involved broker to broker because the other agent is arguing. And sometimes it's really sad how nasty some people get when it comes to arguing. I don't get involved in that nastiness. I simply pull up the contract and then I read them line by line, or I send an email with exactly line 110 through 112 in your contract states so that they can actually see it. And I simply take the exact wording of the contract. That way we are not looked at as if we're interpreting something. You do not have to get emotional because you're simply stating the fact that it is our job to make sure this contract goes to closing as agreed upon by both parties. If one or the other party didn't read that, or one or the other agent did not educate their party on that, that is irrelevant at this point, because the only relevance is that we need to get this contract to the closing table the way it is, or now we need to determine based on what the contract says, what happens.
And not just is that irrelevant, but Manuela made a good point. If you haven't reached out to Legal Hotline, it's a great resource. You should have their number programmed into your phone. However, an opinion given to you from an attorney at the Florida Realtor Legal Hotline is not a defense for yourself or for your buyer or seller for a mistake in the contract. If Legal Hotline advises you incorrectly, that does not protect you in any way whatsoever. So knowing the contract is important. If somebody tells you a deadline that isn't accurate, that is not a protection. So understanding it, the attorneys at Legal Hotline are not physically looking at the contract that you're looking at. They're not looking at the terms or addendums. They're basing it off of a conversation that you're having with them.
Absolutely. Do you want to address closing costs, fees, and charges? I'm going to type the Florida Legal Hotline phone number in.
Yeah, so paragraph 9, this one is where buyer and seller are agreeing on who is paying for what at closing. Every area is different. In our area, we see quite often that seller is choosing the closing agent. This is one of those situations where I see a lot of agents don't really pay attention to it. And unfortunately, a lot of title companies don't either. And I love looking like the hero to my cash buyers when I bring this up. In paragraph 9C, it states that the owner's title policy premium, title search, and closing services, collectively owners and charges, shall be paid as set forth below. And then the selection set forth below, the section set forth below and agreed upon in most cases, if we select that the seller is paying for title and choosing the closing agent, states that seller pays for all closing fees with the exception of the buyer paying for the premium for the buyer's lender's policy and charges for closing services related to the lender's policy, endorsements, and loan closing. So if you have a cash buyer, per the terms of this contract, that cash buyer is not responsible for a closing fee, for example. They're responsible for fees related to closing the loan, not closing the transaction if that section is selected. If the title company happens to charge a closing fee, then per the terms of that section, the seller is agreeing to pay that, not the buyer. I argue this quite a bit with title companies when I have cash buyers, and many of them, especially the smaller ones, say, well, we charge a closing fee. It's wonderful. It can be charged to the seller per what they've agreed upon in the contract, unless it is related to closing the buyer's loan. And that's something that, you know, if you're not looking at your closing statements and understanding them, is a really good way to look like a hero to your cash buyers, because I've noticed 9 times out of 10, you're going to see a closing fee on there, regardless of whether it's a cash transaction or not on the buyer side. The other things that are in there, sections A and B dictate what the seller is paying for and what the buyer is paying for. Knowing these is important. You should be looking at your closing statement to make sure that the buyer that you're working with and the seller that you're working with is not paying for anything that they shouldn't be paying for. Did you want to elaborate on that at all, Manuela?
No, not particular on that part, but I want for you to look at the other line, because this is something that years ago was added to this contract. It used to be that if we wanted for the seller or the buyer to pay for something in addition to what is normal, we would put it on the very last page. For instance, closing cost contribution. We would write on the very last page, seller to contribute whatever 3% of the buyer's closing cost and prepaids. And when that line was added in, and I don't remember if it was 6 years ago or 8 years ago, people started to write that in here. And if you type it in, it might get missed. So I really need for you to pay attention, especially as a listing agent. If you're getting an offer, look at that particular paragraph and see if the buyer is asking for something else under other, because they could be asking for closing cost contribution. They could be asking for a home warranty. They could be asking for whatever else to be contributed. And I remember that I wrote in there one time, I can't remember what I wrote in, but the seller was also a realtor, and at closing, he said to the title agent, oh, look at that, she snuck that in. And the title agent looked at him and said, completely unemotional, no, it's in plain, clear sight. And I thought that was really cute. But it could also be, if you have investor sellers, that they put in underneath here that the buyer is paying the doc stamps, for instance. I've seen that. We do see that with flippers sometimes. So make sure you look at these 2 lines and you don't miss them, because if you miss something there, your customer, buyer or seller, has a really valid point by saying, you know, you did not point that out to me. I would like for that to be paid from you, and it could come out of your commission check.
Correct.
So pay attention.
Another thing to pay attention to, and I'd be curious David's position on this, is in subsection A, you'll see that it states, if prior to closing, seller is unable to meet the as-is maintenance requirement as required by paragraph 11, a sum equal to 125% of the estimated cost to meet the as-is maintenance requirement shall be escrowed at closing. If actual costs to meet the as-is maintenance requirement exceed escrowed amount, seller shall pay such actual costs. Any unused portion of escrowed amount shall be returned to seller. This can cause issues if you have a financing contingency, because lenders are becoming increasingly uncooperative when it comes to escrowing amounts for any sort of repairs. So understanding that that property is expected to be maintained in the manner in which it was when you went under contract. And if the seller is unable to do that, that they do have a protection where they can escrow 125% of the estimated costs. But that paragraph 11 does provide an exclusion for casualty loss. And there is a standard in the contract for that, that provides that if there is an issue such as a fire or a flood in the home, that there are additional protections which allow the seller to escrow, I believe it's 1.5%. Can you, Manuela, scroll to the, I think it's standard F, if I'm not mistaken, to allow for those repairs to be made, but that can cause potential issues with financing. David, can you elaborate a little bit on that, that section of paragraph 9 as it relates to paragraph 11?
Yeah, I mean, to be very honest, that section almost never comes up from my experience, just because it's an as-is sale. So you're talking about basically maintenance obligations that would fail on the seller's side between the date of a contract execution through the date of closing only. I mean, any renegotiation of for instance, if something comes up in an inspection report and you want them to fix, you want the seller to fix the HVAC system, that's going to be addressed either as a credit or as a reduction in the price. So we're basically just talking about maintaining the status quo of the property from contract execution to date of closing. And usually you're talking about 60 days or less in a standard as is scenario. So it's rare that it comes up, but yes, I mean, I think the language, I don't have it right in front of me now, 125% of the estimate, right? Is that what they've said in that section? Mm-hmm. So what we would do, for instance, and here's one of the things that I think it's beneficial when you're working with a lawyer as a closing agent. We have a standard escrow agreement that we can provide to the lender that outlines exactly how the fees are going to be dispersed post-closing. So a lot of times when I have seen it come up, we've been able to address that with the lender by letting them see the escrow agreement. And it's specifically tailored to that scenario. It's not just a boilerplate form. I mean, it's a form that we start with, but it specifically says, here's how the funds are to be distributed, and here's the timelines. Going back to what I said earlier about that lot split, you know, the more specific we can be, particularly with anything that's going to be done in escrow, the better. You know, we need to have proof of services rendered. We need to be presented with an invoice. We need to, you know, know who to pay and when to pay them, basically. But I have seen that come up a few times. It has never held the lender up once we're able to get them comfortable with the post-closing disbursements.
So there's a good question that Catherine brought in. How does the lender know that the AC has stopped working at walkthrough and that the seller is escrowing, which would be the reason for holdback? And that I would address that to you as if you were the closing agent, you would be the one escrowing that amount of money. Are you obligated to share that with the lender? Are we obligated to share that with the lender? Or is that something that has nothing to do with the lender at that point?
That's a good question. I mean, I think if you asked a few different title companies, you'd get different answers. My position is that, you know, there's such broad disclosure requirements under the new lending requirements these days that I think anybody along the way in the transaction that's given information that doesn't provide it to the lender could potentially be exposing themselves to some type of mortgage fraud claim. So my policy is always it's better to disclose than to not disclose. Now, having said that, I mean, the lender doesn't necessarily need to know every detail of the property, right? I mean, they're relying to a certain extent on the reports they're reviewing, on their appraisal. They're relying on information that they've been given. So as long as you're not misrepresenting or materially misleading the lenders, I think that you're okay. But, you know, again, if the HVAC completely dies, the air conditioning is not working in the property, you're closing in the middle of the summer in Florida, the property is going to be uninhabitable at closing. And, you know, the lender, if it's a primary residence, is making the borrower sign documents saying within 60 days of closing, they intend to make it their primary residence. So if they won't be able to do that for whatever reason, then everybody needs to be on the same page, and we probably need to disclose that fact. But I think generally speaking, they're going to rely on their reports, and they probably don't need too much information.
Mm-hmm. Okay, thank you. All right, so are you done with the part on the costs, Bobby?
We are.
I would really like to address the time itself. Let's go look at inspection real quick, but then I would like to go into time. So inspection, we know that that's the main aspect of this particular contract. And I personally, and some of you have heard me say that I don't understand why the FIBAR as is contract is the most popular contract. I just don't get it. Because when you're looking at it from the seller's perspective, that's not the contract I would want. I do believe that there is a lack of education from the listing agents to the seller by weighing that seller in this wonderful thought that, oh, I don't have to repair a thing. I don't need to do a thing. The buyer just simply buys it and I'll walk away. Now, forget that we have a really crazy time right now where the sellers literally can almost get away with murder. We will be in a time again where that's not going to be the case. And I know from some of the names I see on here that you have been through that time with us before, where we were literally falling on our knees, thanking the good Lord or whomever that we found a buyer, because buyers were so hard to come by. And I remember I went to Pro one time and I said, I would like a rider that says finally sold, because a listing that was 238 days old didn't even cause a wrinkle of the forehead. It was just like, well, it's 238 days old. Right now, when a listing is 17 days old, we look at it and say, what in the heck is wrong with this one, right? Times will change again. So the inspection itself says, for the buyer and only the buyer, that at their sole discretion, they have the right to cancel this contract, terminate it by delivering written notice. And it doesn't even have to be that they are doing an inspection. That's the sad part. It doesn't say that they have to provide an inspection report or anything. And the sad part is that a lot of people use that paragraph for whatever reason. We had a code of ethics training from Florida Realtors last year, I believe, where Joel, the one who presented it, one of our attorneys, was asked a question whether it was an ethical wrongdoing for a buyer to submit 3 different offers on 3 different properties, and knowing full well that they are going to play a game and that they are going to only purchase one. We always used to say to people, never make more than one offer, because if both sellers accept the offer, then now you're under contract on 2 homes and you have to buy 2 homes. But here people are now using this inspection contingency or that inspection paragraph by putting maybe 3 offers in on 3 different homes in the hopes that they will land one. And then they're simply canceling out the other 2. I had a broker actually say to me one time that the broker submitted 2 offers on 2 different townhouses. And I said, oh my God, why did you do that? And she said, well, I didn't know which one I was going to get. And she said, I'm just going to go ahead now and have them both inspected. As long as I terminate one by the time period of the 15 days, I'm fine. And I said to her, really? You are going to tie up somebody's property for up to 15 days before you release it? I said, that is absolutely ridiculous. The sad part is, it's neither illegal nor is it considered to be unethical. It's just really, really shabby. So she didn't like what I had to say. She hung up the phone, kind of disgruntled. But the very next day, she called me back and she said, "Oh my God, I'm so glad that you spoke to me that way, because my guilty conscience that night kept me up. And yes, I canceled one of them right away." So please do keep in mind, for the seller, this is not the greatest part of this contract. I have not ever used this as is contract for a buyer without negotiating repairs. We always negotiate repairs, right? Because it comes right back to, we ask, we have a 50% chance that we get what we want. So for the seller, we're now coming as the buyer's agent, we're coming to the seller and we say, this needs to be done and this needs to be done. And I always tell the buyer, pick 3 to 5 maximum items that are really, really important to you. Let's not nickel and dime the sellers, because when you ask for too much, then the chances that you get a flat out no are really big. But the seller typically wants to sell. And now that we're sending them the inspection report and we're asking for things specifically if they are tied to the possibility of whether we get insurance on that property or not, those are usually bigger items. If the seller says, "I'm not repairing anything," and the buyer walks away, we are running into the situation on the seller side that now we have to encourage the seller, you now have to disclose that. You now know that there is something wrong with it, and you now have to disclose that, which would mean that a new buyer who is going to come along is probably going to deduct that off the offering price. So when you look at that, it gives the buyer the sole discretion to back out for any reason. Do not get yourself in a position where you will be known in the industry as the agent who submits multiple offers on multiple properties and using the property inspection clause to get your buyer out of the contract. So along with that, I want for us to quickly scroll down to the time paragraph, because both Bobby and I found as instructors, we oftentimes get, I'm looking for F, we oftentimes get questions on that. And some agents haven't even looked at the pages that have no asterisks next to them because they know we don't have to fill anything in. Those are usually people that are not in contract classes. And I'm a firm proponent. I think that everybody should go to a mandatory contract class once a year. Because when it comes to arguments on whether you have exceeded the time frame or whether you don't, it is clear right here in F, time. We're using calendar days. So that means every day counts, doesn't it? Time is of the essence. They put that in bold letters for us. Other than time for acceptance and effective date, any time periods provided for or dates specified in this contract, whether pre-printed, handwritten, typewritten, inserted herein, shall end or occur on a Saturday, Sunday, or national legal holiday, shall extend to 5 p.m. on the next business day. So you could play with that. Be smart. Utilize that. You want to tighten down the inspection period to 7 days? Well, make it fall on a Saturday. You automatically bought yourself Sunday and Monday, 5 p.m. You can make these paragraphs work in your favor. And now if the listing agent argues and said, "Oh, you're out of inspection period on Saturday," you copy that paragraph, you send it to them and said, "No, our time frame ends Monday at 5 p.m. So what both Bobby and I called Legal Hotline before was last year, because it had to do with a holiday and an observed holiday. So notice how it says in here, national legal holiday. It does not address observed holiday. 4th of July last year fell on, I believe, Saturday. It was either Saturday or Sunday, I don't recall, but it fell on the weekend. And therefore the observed holiday was on that Friday prior. So we had both of us individually 2 different phone calls from 2 different agents who said, "Oh my God, what do we do with this now? Our inspection period ends on Friday. Does it carry over to Monday, 5 p.m. or does it not?" So we looked at this contract. We also, I think Bobby reached out to an attorney, and the bottom line was that the answer was, it's a gray area. Everybody agreed, including Florida Legal Hotline, it's a gray area. Therefore, My suggestion to you is when it comes to a gray area, do we agree that Friday is an observed holiday, a legal holiday? Do we count it or not? Let's not leave it open to assumption. Put an addendum together and write in there, buyer and seller agree that this Friday observed holiday will be treated as a legal holiday, hence inspection period is ending on following Monday, 5 p.m. That way you are making that gray area black and white again.
I'd like to elaborate on that because what we ended up encountering, the co-founder of my company was here, of my brokerage was here, as we were discussing this earlier in that day before Manuela and I did. And, you know, the resolution that we had at that point was to protect all parties, let's go ahead and formalize this with an extension defining when the inspection period would end, because it was a gray area for a couple reasons. The understanding that USC 6103 is really important because it defines what a federal holiday is, and it has two sections of it. And one section of it defined the observance for the purposes of pay and employment for federal holidays. So it created this gray area because if you were relying on a bank to transfer funds for an EMD, or you were relying on a title company to be open for, you know, purposes of depositing an earnest money deposit, and you couldn't perform because of the observance, that was what was creating a gray area. So the solution that everybody had was let's formalize this in writing in the contract via an addendum that specifies what all parties are in agreement on. Because if there is a disagreement, it's going to become much messier. I had this situation a few years ago where the buyer's agent notified us the day after Christmas that the buyer was choosing to execute their right to terminate the contract based on the inspection paragraph in the contract. However, the inspection period ended on December 24th, which was Christmas Eve. December 24th is not a holiday per USC 6103, which is what the contract specifies you refer to, is not a national legal holiday. Christmas Day was. Their inspection period ended on Christmas Eve. They were outside of their inspection period. Buyer and seller both happened to be attorneys, and buyer wasn't paying attention to the contract, but seller, who was a real estate attorney, said, I'm not gonna be so easy to agree to releasing this earnest money deposit. So understanding what that refers to is really important. So many people don't understand how to count deadlines in the contract, and it is such a problem.
And I also want to add to that, it has to be a US holiday, because in where I come from, the 24th of December is where we celebrate our real Christmas. And Sylvia, who's on this call, will back me up on that. But that's irrelevant because German holidays don't count. And we are a melting pot here in Florida. So everybody celebrates their own different holidays. And we just found, because we ordered something that came from China, that the Chinese New Year lasts 2 weeks long and everything is shut down. So we have to keep in mind that, yes, we understand that you are celebrating your Chinese New Year. However, in a US contract in Florida, we have to go with US holidays and not anything else. Okay.
Manuela, on the inspection period, I just want to go back to, I think it's really important to remember that the buyer has two options in the contract, which is to cancel or continue. So often I see that agents will present a request for repairs when we're using the as-is contract, and maybe we haven't agreed upon anything, we haven't formalized anything, or the seller's refusing to do something, and simply making that request does not satisfy cancellation of the contract if the seller doesn't agree to it. So it does not materially change anything in the contract just because you sent it over on a repair request form, or even if you sent it over on an addendum, if all parties have not signed it.
Will you please share the wording that you use, because you use such exceptional wording? Go share that with us, please.
Yeah, so our wording that we provide our agents says that we send, when we send a repair request, as we discussed, the inspection results for the property were not acceptable to the buyer. The buyer is requesting, whether it's an extension or repairs, whatever that is, so that we can continue moving forward, moving toward a closing. At this time, though, unfortunately, the buyer's intent is to terminate the contract if the seller will not negotiate the inspection results. The buyer is really hoping that we can work something out, but the contract only gives the buyer the right to cancel, and we are very close to the expiration of the inspection period. We look forward to hearing from you and the seller and hoping that we can find a resolution to everyone's satisfaction. So you're putting them on.
I love that wording because it puts some fire under the seller's butt where they have to make a decision, and you are protecting your buyer by terminating that contract.
And you're
It
also
doesn't mean that if the seller doesn't come back later and said, oh my God, we would have done that, you can just write a new offer.
Right. And you're doing it in a way that is not so off-putting. We understand, we want to move forward, but these are the items of concern, but simply making the request does not protect you. And David, I'm curious what your opinion is on that.
Well, yeah, I think that when you're talking about a written notice, which is, I guess, what the question really involves, right? How do you notify the other party of anything?
Well, because in the as-is contract, you're not required to make repairs. So just making the request of repairs wouldn't be changing any of the terms of the contract or canceling the contract unless you were doing that with a caveat that if we can't come to an agreement, we're canceling.
It comes right back to that addendum that only was signed by one party, because we put that repair request addendum in, but unless it's signed by the seller, you still would expire with your inspection deadline.
That's correct. And I think the way that you've worded that is great, Bobby, because you're basically saying, I mean, I call that like a soft termination. That's kind of what we call it in the industry, right? Where we'll say, look, we're terminating this contract unless we agree to the following. And please acknowledge, please accept this notification, this written notice as our termination unless such and such happens. So
that's
you
even
protect
better.
your, but at the end of the day, you offer the alternative because you don't want to lose the deal, right? So I think I like the language a lot. A soft termination is, in my opinion, the best way to handle that situation, because at the end of the day, you're trying to protect the earnest money. You're just trying not to do so at the peril of the entire transaction.
Well, and I actually think it's about more than just the escrow money, because the buyer's already out money for the inspection, they're out money for the appraisal, they may be homeless at that point. So I think it is about a whole lot more than just escrow money, and it is also about goodwill.
True.
Yeah. Okay, so we are running out of time. We could be talking about contracts for 2 days straight, but that's not the intent. Are there any questions that anybody has? You've got us for another 8 minutes. Put some questions out if you do. And then also we would like for you to reach out to us at any time if you have suggestions for other topics that you'd like for us to go over. We're hoping that maybe every once in a while we can invite David to join us again. Bobby and I would like to do this on a monthly basis, that we're bringing a topic to you so that we are discussing things that will make us all better. We do believe that a real estate school should not only be there for the courses that you have to take in order to get licensed and keep your license. We want to take this a lot further and put good courses in. And I would really like to stress the fact that if you all felt that you spent your time wisely with us today, please go on our website and Facebook page for Elite Real Estate Academy and write us some good feedback. We can use all the support that we can get from you because we are the new kid on the block. We have a question in here. Okay, thank you, David, for putting your information in.
I'd also like to say, I say all the time, it's probably a quote I repeat far too often, is that, but I also don't think it can be said often enough, is that a rising tide lifts all ships. And I truly believe that. That's why I became an instructor. That's why Manuela became an instructor. The more we can encourage each other and help each other as professionals, the better our industry is. So that's one of the reasons that we're doing this venture, is there's such a need for it in our industry. I truly believe that now more than ever is when it's important to recognize how important our relationships with our colleagues can be in a multiple offer situation, especially having that good reputation, having other agents know that you know what you're doing, that you understand the contract is so important, and that you're going to operate from a professional standpoint, and having as many tools in your toolbox as possible is also important. So Legal Hotline, while it is a great tool, especially because you are already paying for it, having a good relationship with a real estate attorney is also important. So I value being able to reach out to David when it comes to questions I have, contract issues, trying to prevent contract issues, which is incredibly important. So whether it's David or another real estate attorney, I think that's one of the most important tools that you can have in your toolbox, is having a good relationship, one that you can tap into to keep yourself out of real estate jail.
Absolutely right. So Bobby, there is a request for you to put in your contact information. Let's put in your contact information and my contact information so that you all can reach out to us. But you can always get us on our Elite Real Estate Academy website and Elite Real Estate Academy Facebook page.
Correct. I'm putting it in now.
Do you have any last tidbits for us, David?
Sorry, let me unmute there. No, I really appreciate the opportunity to speak with you all. I'd be more than happy to do so again in the future. And I share my information, email and phone. But Bobby, I mean, I think he made a great point. The funny thing about real estate law is there are some states where real estate attorneys kind of are the only resource for agents and for buyers and sellers. Florida is not one of those. So I think you have a lot of choices as an agent when you're presented with who are we going to affiliate ourselves with. I know a lot of brokerages offer title companies and closing agents. I completely understand that there are choices out there for you all. And again, I'm certainly not here to sell my service, but I would say that, a lot of the out-of-state buyers that we're seeing coming into Florida right now are totally unfamiliar with title companies. So if there's ever a situation where an out-of-state buyer that you're working with says, who would you prefer to talk to from the real estate law perspective, that's probably a perfect opportunity to make an introduction or let me help you with your client, because again, for me, it's a relationship thing. Most of what I do day to day involves repeat customers, repeat business with either developers or agents or contractors. So we try to develop those relationships, but whatever we can do to help you with your customers, we are here. And we don't kind of operate like a lot of law firms where you have to have 4 different meetings with a lawyer to get your foot in the door and then know somebody. Just pick up the phone and call or send me an email, and we're always available. So whatever we can do to help, we're here.
Thank you so very much. All right, well, that brings us to a close. We so very much appreciate your attendance and the lovely comments that you've left here on the chat, and we hope to see you in the future. Have a fabulous day, everybody.
Thank you. You too.